Hey guys, welcome to the Max Invest YouTube channel. In today's video, we're going to be discussing a few things surrounding Chainlink, a few things surrounding Ethereum, and then what I like about what Phantom recently did. Of course, if you enjoyed the video, remember to like and subscribe to the channel, join the Discord channel, and follow me on Twitter. And remember, nothing in this video is financial advice. So let's get into the first bits of news. Now, one thing that recently happened is the market had a little bit of a correction. All of the cryptocurrencies dropped about 20% in a very short period of time. Now, this was basically because of a big liquidation event that happened in Bitcoin, and it essentially carried through to a lot of other cryptos. However, I do want to say, despite this big drop in Chainlink's price, it's looking pretty good. Chainlink dropped from about $36 to about $25. However, despite that, Chainlink's been able to hold the bull market support band, it's bounced off the bull market support band, and it looks to be continuing its upwards trend, which is great to see. Now, the next bit of news that I do want to discuss is that Sergey Nazarov, who is the founder of Chainlink that we all know, has joined the board of dClimate. Now, dClimate is a decentralized data market that essentially has tons and tons of climate data. Of course, this is really good for Chainlink, as Chainlink do need a lot of this data. We know that Chainlink is a decentralized data oracle, and what it does is it feeds data to smart contracts. As a direct result, Chainlink does need a lot of climate data. Now, the main thing that Chainlink has been using and is needing climate data for is parametric insurance. A lot of big insurance companies like Marsh Global have come to Chainlink and they've said, hey Chainlink, we want to put our insurance on the blockchain. We want to use smart contracts and blockchain to store all of our data and execute contractual agreements. So, as a direct result, Chainlink needs more and more climate data, and using dClimate is one way to get tons of good data for these parametric insurance products. Of course, this makes me very bullish on the future of Chainlink and the future of insurance, and I can see a lot more insurance companies coming onto Chainlink. Now, the other thing to point out is that Sergey Nazarov has been joining the boards of tons and tons of different companies and different cryptocurrencies. We know Sergey Nazarov's already joined the board of Hedera Hashgraph. Sergey Nazarov has been an advisor and been in close talks with Swift Payments, and he's doing heaps of stuff. This is one of the things that I love about Sergey Nazarov. Sergey Nazarov is going into all of these traditional industries, such as traditional banking and insurance, and he's telling them that it is a good idea to utilize blockchain. He's telling them to use Ethereum-based smart contracts and Chainlink-based data oracles in their businesses, and it seems like a lot of these businesses are listening. So it does look like a bunch of companies are going to come onto Ethereum and Chainlink and start using these products, and this is very much thanks to Sergey Nazarov, who is pushing a lot of this forward and is probably one of the most influential people in the crypto space right now. Now, the last thing that I briefly wanted to discuss is that I'm going to be doing a video on Chainlink yield farming, so if there's any places you're getting yield from, it would be very helpful if you could tell me, and I'll include them into the video. I'm just looking for a couple of other different farms to add into my video, so that would be much appreciated. Now, I do want to move on to some Ethereum news. As many of you know, if you've held Ethereum, EIP 1559 was recently implemented. Now, the point of EIP 1559 was to smooth out gas prices, change Ethereum's fee system, and burn Ethereum. We already know that around $500 million worth of Ethereum has already been burned, and this is looking great so far. However, one common misconception that I'm seeing is a lot of people were saying, hey, EIP 1559 was designed to lower gas fees. EIP 1559 was essentially designed to push them down, and that's the lie that I hear a lot. However, this is not the case. EIP 1559 did not push down gas fees, and this graph shows it perfectly here. What EIP 1559 has done is it's smoothed out gas fees. There are a lot less fluctuations in gas fees, and it's a lot more predictable. If you take a look at this chart right here, you can very clearly see where EIP 1559 was implemented and the direct effect of it. Also, Another thing to point out is a lot of people are saying, hey, the gas fees are not any lower whatsoever after EIP 1559. In fact, they're a bit higher than they previously were. Now, the reason for this is because a bit of an NFT mania started about the same date that EIP 1559 launched, and as a result of that NFT mania, gas fees have stayed quite high ever since then. EIP 1559 has not raised gas fees, it has not lowered them, all it has done is it has smoothed them out, and I hope that chart helps. Now, the next thing I briefly wanted to talk about is Optimism sent out a tweet and they were saying that they found some nice layer 2 gas reduction techniques. So, this is essentially what I love about Ethereum. I think Ethereum's design is great. Ethereum's design right now is to have the most decentralized and secure base layer out of all of the cryptocurrencies, which is the Ethereum layer 1. However, built on top of this base layer is a bunch of layer 2s, and all of these layer 2s will essentially inherit Ethereum's security and decentralization. However, these layer 2s will be able to process a lot more transactions and it will be a lot cheaper to use. As we can see, Optimism has already said that they have gas cost reduction techniques in the works, and I expect Optimism to be moving very fast, upgrading very quickly, and eventually getting tons and tons of liquidity into Optimism. As we can see, Optimism's fee revenue is doing very, very well. When the liquidation event happened, a lot more people were using Optimism because currently the main thing that you can use Optimism for right now is Uniswap, and a lot of people were buying and selling Ethereum during that event. So Optimism had $500,000 worth of fees in 24 hours. This is destroying even what Bitcoin was doing in that same time period, and it seems that Optimism is going great right now. So I am very excited about the future of layer 2s on Ethereum. Now, the next thing that I also wanted to add in is that Standard Chartered, which is a big bank in the United Kingdom, have said that they are more bullish on Ether than Bitcoin. They gave Ethereum a price prediction of $35,000 in the near future. They also said that in that time period, they expect Bitcoin to only double or triple, while Ethereum goes up 10 times. So this is great to see, and it's good to see that a lot of banks are getting on board with crypto, and they are seeing the value proposition in Ethereum. Standard Chartered have said that they are probably going to be buying some Ethereum, and this does look great for the future. A lot of banks really are seeing that Ethereum has a lot more utility than Bitcoin. There's a lot of things that you can do on Ethereum, and it is probably going to flip Bitcoin. Also, in my opinion, I wouldn't take the price prediction too seriously. Most price predictions are just random numbers thrown out. However, I definitely do believe Ethereum will eventually break $35,000. I just think it's a bit ignorant to predict the exact time period in which it will do that. Now, the last thing that I briefly wanted to talk about is Phantom's $370 million incentive program. This incentive program was actually about $500 million because it's actually $370 million of their own tokens. So this is quite similar to the Avalanche Rush, where it was designed to get a lot more people using Phantom. However, it had some key differences. Essentially, the main difference is on the Avalanche Rush, when they implemented the incentive program, it was basically to make there be enhanced rewards for those using Avalanche. Instead, Phantom haven't quite done this. What Phantom have done is they've made there be enhanced rewards for those developing on Phantom. As a direct result, all of the decentralized application developers have started developing applications on Phantom. They've had a whole rush of development and developers because they want this money. And if people develop things on Phantom, they get tons of money and it's very economically rewarding. Now, the reason I wanted to bring this up is not because I like Phantom, but it's because I like the idea, and I think some of the Ethereum Layer 2s should do this. They should have a $120 million incentive program, and it just brings a lot of developers onto the L2. I really do think this is a much better idea than what Avalanche does, because it's incentivizing development, and once that development's done, it's there forever. Whereas if you just incentivize high yields, once those yields are gone, then all of the users go. However, I do want to say I don't like the Phantom blockchain that much because it only has 47 validators, which means it is objectively a centralized blockchain right now, and I don't think there's too much going on in Phantom. The main reason that I wanted to bring this up because I really do like the idea, and I think it's a good idea for other blockchains to actually copy this idea. Incentivize development and don't incentivize high yields. If you get all of the development, the yields will come and the users will come. If you just incentivize high yields, the users will come and then they will go when the yields are gone. So that's what I was very bullish on today. I did like this and I thought I would point it out in a video. Anyway, that brings us to the end of the video. If you enjoyed the video, remember to like the video, join the Discord channel and follow me on Twitter. Thanks for watching the video.